Hello and welcome to Tysons Community Alliance's Q4 Tysons Quarterly Market Report. My name is Drew Sunderland. I am the Vice President of Strategy and Research here at Tysons Community Alliance. For those unfamiliar, TCA is an independent nonprofit community improvement organization committed to the ongoing transformation of Tysons, Virginia into a vibrant, inclusive, globally attractive urban center. The TCA has several focus areas and programs including placemaking, transportation and mobility, branding, marketing, and community engagement. Today's program is a production of our data and research program, headed by myself and my colleague, Kevin. All right, and a quick view of our agenda for today. We'll start by giving an overview of the Tysons DataHub and Quarterly Market Report platform. Then dive in with Kevin on our Q4 market overview and trends. We'll also talk about a profile of the Tysons community and housing market, teeing up our panel, How Affordable Housing Gets Financed, moderated by our CEO, Katie Crystal. Talking about the data program here at Tysons, everything runs through our new tool, the Tysons DataHub, a comprehensive online interactive database featuring over 100 metrics across all real estate sectors, transportation, and mobility. It's powered by a host of public and private data sources, including data coming from Fairfax County. We also have a development pipeline that tracks all delivered, under construction, planned development since 2010 on a building-by-building basis. And additionally, we produce every quarter Tysons Quarterly Report, which provides a snapshot of all market activity on a quarterly basis, as well as include a special feature deep dive into a specific topic area. This month's edition is focused on housing. Before we dive into the data, let's just go through some key takeaways from this quarter. First and foremost, the key takeaway for the Tysons market is the underlying fundamentals are quite strong, and that we're starting to see a level of stability across markets, despite significant regional and national headwinds. Starting with residential demand, we've seen a 94% occupancy rate, which remains high despite consistent delivery of new units over the past 10 years. In addition to the high occupancy rate, we see a continued steady pipeline of new housing supply. In fact, we have 1,000 affordable housing units currently under construction, which support our continued population growth as well as evolving demographics. The office market remains stable as well. We've seen a 1% drop in overall average vacancy from quarter to quarter, and also consistent average rents, signaling stabilization. Hospitality rebound continued this year with a 4% year-to-year growth, reflecting return to pre-pandemic norms. And finally, retail, always a strength for Tysons. Last quarter, we saw 10.4 million visits to Tysons, supporting a very robust holiday retail season. Additionally, retail vacancy remains low at 2.4%. Now, sorry, let me just pause here. Now we'll transition over to my colleague, Kevin O'Halloran, our Associate Director of Data and Planning, for a deeper dive look at the numbers across all sectors. Kevin, over to you.
Yeah, thanks, Drew. I think, as you mentioned, the core takeaways here is definitely a strong market in Tysons. Here we have three different sectors: office, retail, and hospitality displayed. And you can see that basically what we've done is taken some core metrics and placed those on a year-over-year basis, comparing them to the same quarter in 2023. And then below, you'll see a chart that sort of charts out every quarter over the last 5 years back to the pre-pandemic same quarter. And in office, we've basically seen a quarter-over-quarter drop of 1% in office vacancy, as well as sort of stabilized average rents. So overall, you're sort of seeing certainly the past couple of years, right after the pandemic, there was some disruption in the office market, as happened nationally and regionally as well. same in Tysons, but we are seeing some signals of stabilization with that vacancy rate finally dropping. Also, net absorption was fairly solid this past quarter at about 250,000 square foot. And as always, our trophy office really continues to perform well with pretty high regionally average rents. So overall, office is stabilizing, and I think is pointing towards better quarters ahead. For retail, absolutely, as you mentioned, very strong area for Tysons. Vacancy rate is pretty regionally some of the lowest you see in retail, and average rents continue to go up. So absolutely, the retail economy is doing very well in Tysons, and you can see that displayed here. Hotel occupancy rates are returning back to pre-pandemic norms, certainly with kind of reduced travel over the last several years because of the pandemic. Those dropped, but we're definitely seeing a rebound. And I think this is the first quarter that we've seen kind of it matching with 5 years ago. So definitely good to see here, and rebounding travel trends also pointing to growth. Now for the sort of star of the presentation here, residential, high occupancy rates, as you mentioned, as we've continued to deliver new units. We're seeing asking rents per square foot up about 5% and effective rents per unit up 6%. This is definitely alongside with the affordable housing that's coming along. So that's certainly, while rents going up is good, from an investment standpoint, we also are definitely taking into consideration broader affordability with those new units coming in. This is also with median condo sales on the sales side being up 2% year over year. So definitely robust and strong demand in the residential section.
Now, our approach to tracking Tysons includes both a look at asset performance, which Kevin just covered, but then also a dive into visitation to Tysons, tracking people and their interaction in the environment. Where are they coming from? Where are they going to? How long are they staying? We feel this is a great indicator that shows a holistic overview of the overall economic vitality here in Tysons. Kevin, can you just talk a little bit about the methodology and also some of the high-level takeaways that we're seeing this quarter?
Yeah, absolutely. So yeah, as you mentioned, Placer is a really powerful tool, kind of utilizing anonymous cell phone data to get an understanding of where people are going and where they're visiting. It's also really powerful because it can segment into different groups. So you can sort of differentiate between residents in Tysons, maybe employees in Tysons, and folks that are just visiting. And what you're seeing here in this chart is an aggregate picture, so all different audience types together. And we've definitely seen continued growth. We're not quite at pre-pandemic levels. We're about 91% and certainly trending back upwards. But we are seeing 4% year-over-year growth for this quarter. And December, because of that strong retail base, is typically the busiest month of the year. A lot of folks coming out and shopping at the malls. And we're at about 95% of that pre-pandemic level. And so you can definitely see this strong trend of overall visitation to Tysons rebounding. Now, getting into those various audience groups, we can look at employees as well. This last quarter saw a 7% increase year over year from 2023. Now, quarter to quarter, things shift, and there's kind of typical trends. They were down slightly from Q3, but I think a lot of that can be attributed to just general holiday travel for employees going out of town, that type of thing. So that's pretty normal and in line with what we saw in 23 and again in pre-pandemic times. But we are seeing kind of a year over year 14% increase in visits per employee. So it definitely seems that folks are coming into their place of employment more frequently during the quarter. And I just also want to note too that this isn't strictly office. This is kind of larger employment trends. So this could be retail workers or hospitality workers, those types of things as well. But it does give us kind of a decent indicator as to what's going on in employee kind of back to work trends. Now on the residential front, again, the focus of this webinar, we're definitely seeing some really interesting trends and an important baseline shifting. So, you know, resident visits, the kind of the base foundation of visitation to an area. And we've seen over the last couple of years from pre-pandemic, we're about at 8% of total visitation being for residents. Now we're at 11% this past year. And I think a lot of that can be attributed to just a growing population in general, more housing units being built and more activity resulting from that. There was definitely a decline during those years directly after the pandemic. And I think a lot of that is just general reduced travel trends, folks not leaving the home as often. So you definitely saw a dip there, but now you can certainly see since 2023 a big surge, 14% just in the last year, and over 20% higher than what it was pre-pandemic. So this is encouraging, I think, pointing towards kind of that mixed use vision and of activity that was laid out in the Tysons Comprehensive Plan. So residential visitation is continuing to grow, and I think we can definitely expect that forward.
Fascinating. So now that we know what the people are doing, where they're coming from, where they're going, how long they're staying using placer data, leading up to our panel here, let's take a deep dive and understand the Tysons community profile. Who is the Tysonians that we're talking about here? And then also talk to us, Kevin, a little bit about the actual real estate sector delivery over time. What's that evolution looked like? One thing I'll point to is that since 2010, roughly, we know the population has doubled. And we also know that the majority of new development here in Tysons has been residential. It really is the primary thrust of creating a mixed use environment here in Tysons. So talk to us a little bit about the people here and the evolving residential sector as well.
Yeah, absolutely. I mean, you're absolutely right that definitely seeing continued population growth. We're kind of averaging over the last 5 years of that trend chart, average 3% year-over-year growth. It's about double what the county is experiencing. So certainly a lot of demand for folks to move to Tysons. And again, that's also resulting in plenty of housing development. We've seen some shifts in kind of the age and racial demographics of the community, a larger sort of shift in 55 plus community. We've seen that with some senior developments that have happened over the last couple of years. Also seeing a larger share of the population being that kind of young professional, 18 to 34 component. So I definitely think that there is delivery of units that are catering to these types of demographics. But overall, I mean, still a balanced picture on age, and certainly families are living in Tysons as well. So I think we're seeing a pretty good spread of different age ranges calling Tysons homes. Now, also similarly, you know, Tysons being a very demographically diverse neighborhood, we've kind of passed into a majority minority community, and being more diverse than the county overall. So certainly this is a place that is attracting all kinds of different people to call home. And yeah, a lot of this development and the residential population growth has been mostly proximate to metro. About 65% of residents living within a quarter mile. That's definitely pointing towards a demand for metro as an amenity and convenient access to transit and other mobility options to get folks around. So speaking on to that housing delivery component, certainly we have seen, as you mentioned, a significant portion since the comprehensive plan 10 years ago. 59% of everything that's been developed since then is residential. So 8 million square feet, or about 7,000 units. We've gotten up to 16,000 units today. And with that affordable housing coming online, as we mentioned, we'll have almost 2,000 units, about 1,800 units of affordable housing. And that'll kind of take us from roughly 5 to 6% affordable today to around 11% once those units are delivered. And we'll get us up to around 17,000 units overall. And we'll just continue that population growth and imagine greater diversity as well. Certainly, you know, on the housing type front, 89% are multifamily of some variety. So that's kind of low rise, you know, 3-story buildings, and then more of the high rise developments, again, probably closer to metro, around 30% being delivered within that quarter-mile radius. So we're certainly seeing a lot of development happening in the residential space to meet this overall residential demand.
Thank you so much, Kevin. One thing to point out. Um, Tell us the percentage AMI the 1,000 units cater to.
Yeah, absolutely. So what's really exciting about these additional units that are getting built today is that they'll primarily be serving households that are making 60% or lower of AMI. That's a really important addition to the neighborhood. Currently, our roughly 800 units of affordable that we have today are serving primarily 61% and above AMI. So this is really filling a big gap that we have today, and I think will definitely open Tysons up to even more families to move in the future.
Absolutely. And the economic impact of that is significant, obviously serving folks who work in our retail and hospitality sectors, as well as young families. This is a really significant boost in the affordable housing offering here in Tysons, which begs the question, teeing up our panel, how does this all get financed? Before passing over to Katie, just want to remind folks that to view our full report, please visit our website, www.tysonsva.org. You can view a digital version, download a copy of the report, and even request free print copies. So thank you all very much for joining us today. Be sure to join us next quarter. We'll release our date and webinar information in the coming weeks. And with that, I would like to transition over to Tysons Community Alliance CEO, Katie Crystal, and her esteemed panel. Thank you so much.
We have an impressive panel of experts and doers today who are going to, through these stories, shed some insights into the critically important topic of affordable housing in Tysons in general and in how it gets financed in specific. A little bit about their background. Carmen Romero became president and CEO at True Ground Housing Partners, formerly APA, in July of 2021. She joined True Ground in 2011 and has spent the last decade overseeing the real estate team, contributing to the creation and preservation of over 1,000 affordable housing units in the DC region, with additional developments underway in Maryland, Virginia, and now DC. Ms. Romero also serves on the board of directors of the Columbia Pike Partnership, we are proud to say, the TCA, and formerly served as a housing chair of the Virginia Latino Advisory Board. As principal of the Amazon Housing Equity Fund, Senthil Sankaran is responsible for the deployment and management of Amazon's commitment of over $2 billion in below-market capital in the form of loans and grants to preserve and create over 20,000 affordable homes in Amazon's hometown communities, which include the Puget Sound region of Washington State, the Arlington, Virginia, and Greater Washington region, and Nashville, Tennessee. Prior to Amazon, Senthil served in a variety of real estate development roles in both public and private sectors, including with the District of Columbia Housing Authority and the Office of the Deputy Mayor for Planning and Economic Development. Jason Duguay is the Senior Vice President and Principal at SCG Development. He has been with SCG since 2010 and is primarily responsible for acquisition, development, and oversight of the company's development activities. He became a partner in the company in 2020, and during his time at SCG Development has been involved in the acquisition and development of over 60 affordable housing transactions across 12 states, with total development costs of over $2 billion. And Tom Fleetwood is a graduate of West Virginia University and, importantly, George C. Marshall High School, right just on the border of Tysons, and is a lifelong resident of Fairfax County. He is in his 22nd year of service to Fairfax, including 20 years with the Department of Housing and Community Development. He has specifically worked as the director of the county's housing department since 2015, and during that time has overseen a dramatic increase in affordable housing production and programmatic innovation. We are so grateful to have you all here today. You four have made a massive impact on Tysons already. And I am going to ask you to talk a little bit as we get started about affordable housing in Tysons in particular. As we do that, we're going to transition. Mostly, our guests will get to see your faces as you talk and interact with each other. But we're going to have one slide up as you answer this first question, if we can go to the next one, just to talk a little bit about and set a little bit of context for just how dramatically these two projects are changing the landscape in Tysons. They are doubling the supply of affordable housing available in Tysons, doubling the percent of the total housing stock that is affordable in Tysons, and dramatically expanding the supply that is affordable to households making 60% or less of area median income. So we'll have that up for people to process just how big this impact is as I ask each of you to answer the following question. You have all dedicated your career, as people could hear from your bios, to affordable and workforce housing. And we know that affordable housing in general is important for creating economic mobility for families and educational attainment and diverse and sustainable community. But why is it important to you to develop or finance the development of affordable housing in Tysons specifically? Carmen, I'll ask you to kick us off.
Thank you, Katie. Well, for us, Tysons was a really important place. You know, at True Ground, we believe in developing new supply because part of the affordable housing crisis is really the fundamental lack of supply to meet that need. And the Urban Institute and the Housing Association, nonprofit developers, and others do a good year every year, kind of tracking the progress as a region. And when we looked at areas of opportunity, we noticed that in Tysons, where you have 100,000 workers, and at that point, without very much dedicated affordable housing, we thought we could really bring our expertise there in terms of new construction. And oftentimes it takes, you know, a decade to get through a, rezoning process. And you are often kind of forced to do things really incrementally. But with, the combination of a public-private partnership with Fairfax and then Amazon that was, arriving to the DMV around that time with their fund, there was an opportunity to do something at scale that frankly had never been done in this region. So taking on not just, bringing units to Tysons, but bringing it at scale and in the scale that the landscape of the need deserved was something we just couldn't walk away from. So this was a project that we sought after. We competed in the open market with other potential buyers and submitted offers, through a broker competition.
Tom, you all are obviously supporting the production of affordable housing all around Fairfax County. Why Tysons in particular? Why does that matter to the county strategy?
Sure. And first, Katie, thank you very much for the opportunity to be here and to talk about this most important topic. For Fairfax County, Tysons is designated as the county's urban center. And for us as the housing agency, Tysons is really about opportunity. It's about opportunity for employment, opportunity to contribute to the county's economic competitiveness, and affordable housing provides access to those opportunities. And so we had, as Carmen said, the opportunity to deliver a level of affordable housing at a scale that we'd not attempted before. And we're doing it at both ends of Tysons. Both are transit-oriented development. The Exchange project, which is being delivered by True Ground, is also delivering a brand new Fairfax County Community Center that will serve the entire area that was much needed as part of our ongoing efforts to build Tysons into a true community. And so for us, it is very much about supporting our urban center, supporting our economic engine, and providing access to the opportunities that come with it.
Great, thank you. And Senthil, as folks heard in your bio, you're overseeing investments in quite a few different locations all around the country. So tell us how Tysons fits into that strategy.
First off, Katie, thank you for inviting me to be a part of this esteemed panel. And I'll start off with actually saying that, part of the ethos of our fund is really to try and understand the needs and priorities of the communities that we are selecting to be in. Right now, as you mentioned, we're in what we call HQ2. Like Tysons falls within our HQ2 scope. We also invest in the Seattle, Puget Sound region and in Nashville, where we have large corporate presence, including our HQ1 headquarters in Seattle. But Tyson specifically provided a unique opportunity for us, given its unique assets that come along with it in terms of, it is such a high opportunity area. It has all of the assets of the county in terms of access to great schools, but then, adjacency to transit for these two large projects, the scale of these projects and the ability to have an impact on, in such a meaningful way in such a, with just two projects is quite rare to find. And so, we, as a fund that is truly driven by the impact that we're able to create, I don't know if I want Carmen and Jason hearing this, but these deals were no brainers, and like we were happy to find a way to make these work. But as I mentioned, before, like the public side is such a big part of how we select where to place our investments, because Tom and his team have been fantastic about communicating what the county's priorities were. So it was easy for us to align. And, as Carmen was mentioning, a lot of these projects can take a decade to put together. And so we saw a rare opportunity where we could take the asset that we were bringing to the table, which was low cost capital, and act as an accelerant to help these projects that might otherwise take a lot longer to happen in a much more expeditious manner. So having the right players at the table, both on the public and the private side, have really facilitated the ability for us to make an impact in what we think is a very, very high opportunity area within the region.
Excellent. Thank you. And Jason, I'll have you chime in just as we finish setting the table here. You all similarly are doing projects all over the U.S. Tell us why working in Tysons presents a meaningful opportunity for you. I'm going to have to come off mute first.
Thanks, Katie, for that and for all the other nice introductions. Yeah, I mean, so SCG is based in Tysons. We always have been. My whole 15 years, I've had Tysons sort of out my window, and transformation is sort of, I think, an understatement. Thanks to the help of TCA and FCRHA, and now most recently, kind of crucially, the Amazon, the Housing Equity Fund. Yeah, just some of the crazy stuff, like the stats on the previous slide. I mean, talk about transformation, doubling population since I've worked here in Tysons. That stat about being metro adjacent didn't exist, obviously, because there is no metro. So yeah, like you said, we do stuff up and down the East Coast, and we made the conscious decision a few years ago, maybe 10 years ago now. It seems like it was just yesterday, but like here, there's opportunity. It's probably more difficult here. It would be impossible without FCRHAs and Amazons and the other groups. But we see it's in our backyard. The need probably eclipses all of the other markets we worked in. And so, yeah, we just kind of, we made the decision that here is the county as a whole, the DMV as a whole, but specifically Tysons is the biggest opportunity. Again, the biggest challenges, but I think the biggest upside. And transforming a community, like including affordable housing, it's nearly impossible, and everyone seems to be getting it right.
Yeah. Well, don't go back on mute. I'm going to stick with you for a second. And what I'm going to start us to do as we move into the panel is ask you and Carmen to tell us a little bit about the stories of these two projects that are now underway. Somos in the case of SCG Development, and the Exchange at Spring Hill in the case of True Ground. So Jason, tell us a little bit of the story of Somos, how the site was chosen, what factors determine the program, and then specifically, if you could get into the number of apartments that you were able to build, how deeply affordable those apartments they could be.
Sure. I've mentioned this to some folks on here. I think that a lot of times these stories do sort of tell themselves. It's everyone likes to kind of state that, like, looking back on something, it's like, hey, that was exactly what we had in mind. This was exactly how many units. This was going to be the affordability. This is the time we were going to close it. I can tell you that's typically not true of anyone, especially in the affordable housing space. I would say a lot of the story of this one specifically started on a Tysons event similar to this, where we were actually presenting on another Fairfax County project, a new construction, almost 300 units. And, just out of the just putting people together and having the discussion on affordable housing, Capital One approached SCG and just kind of said, hey, look, we're here, our headquarters are here, we want to find a way to help. And then, this is a 5-year story or 5 or 6, but, after that, we identified an underutilized site. We took it through rezoning and entitlement, all assembled the financing. There's obviously a lot more underneath that. But yeah, how you program these sites, I always think a lot of it's resource dependent. The specific affordable housing programs all say, look, this is what we want to deliver. We have a market driven approach as developers that we want to make sure we're hitting what the market is demanding. And then from an overall size, again, it's typically resource constrained. At Somos, for example, we actually could have put more units on that site. From a whole dollars perspective, obviously the resources that bear the FCRHAs, and thanks Tom and the Centrals of the world, they have, there's a lot of money behind getting these affordable housing projects delivered, and more than in most parts of the country, but there still is there's a limit. And so I would say that, the financing are typically the linchpins in like kind of identifying what gets built and how much of it gets built.
And our story, I think I shared kind of the front end, which is we were intentional. We wanted to find a site that was owned in Tysons. I think what we did not, and then we were thrilled when Amazon came to town and there was accelerant money that could be used to bring a project forward. I think the hardest part for us was, no one's done 221-story towers, and we didn't use 9% credits. We used 4% bond credits that have historically in Virginia been plentiful. It's the way you can access the tax credits, and in our case that we sold to Bank of America, that are our equity. Well, about halfway through the project, that all of a sudden became something that the rest of the country had struggled with for years, which is we were out of it at the statewide level. So it just over and over in the course of the 2 years to get to closing, we sort of had some existential moments and then Tom knows these moments well, where we weren't sure this was going to work, right? And it was terrifying because these are federal programs that you can't change overnight. And so we were very fortunate that we went to Governor Youngkin and were able to get $100 million of the governor's bond pool allocated. And he was very supportive of housing as economic development in that story that we told. So we used bond cap from him for one tower and the other tower from Virginia Housing. So completely unprecedented. However, it came with a stipulation that if we were going to use the governor's pool, we had to close in 120 days. That meant we needed a permit for 221-story towers in 120 days. And Tom got the people of Fairfax County in a room and said, we're closing in 120 days. They need a permit. And would you not know, they were ready with a permit probably 2 weeks before we needed to close in December. So I think it's just a testament to really Fairfax level of commitment that started at the, chairman's office, the board of supervisors, Tom. I can't frankly believe that we're under construction and that we close and we're 2 weeks ahead of schedule and knock on something. But for all of really the pain, and I really have to give just huge props to Senthil and Tom, who just kept going. That's what you have to do in this business. You just have to keep going. And I think right now we're in this moment again, right? And I forgot to mention interest rates pretty much doubled in the course of the underwriting of the deal too. So we had like tens of millions of dollars of gaps that we had to fill as we kind of were trying to push the closing. But that's, again, like I said, very timely considering where we are today.
Speaking of gaps to fill, I want to go to Tom to talk about some of the many creative instruments that are in use in these 2 projects. Before I do that, Carmen, one other element of the program I'd love to hear you speak to, and I'll invite Tom to talk about it as well. Could you say a little more about something you mentioned in your opening remarks, the community center component of the exchange? What does that look like, and how is that being made possible?
Well, I won't steal Tom's thunder because this is Fairfax is really the lead on this one, but I'll add some color to what Tom says if he leaves anything out.
That sounds like a great deal. Well, I'll start, Tom, to just tee you up. There are a lot of local investment tools that are being leveraged by these two different projects. There is the Tysons Housing Trust Fund, the county's Affordable Housing Development and Investment Fund. There are some American Rescue Plan dollars here, I think. There is the unique land lease partnership with the county's Redevelopment and Housing Authority. So can you help us understand a little bit about some of the different tools the county's using to support the development of affordable housing? And maybe if you could contextualize this, why has Tysons required these creative approaches?
Sure. So first of all, in order to be successful with these projects, you need to have good partners. And we are very lucky in Fairfax County to have development partners like SCG and True Ground, working in our jurisdiction and truly able to perform under very challenging circumstances. Tysons is unique in many ways relative to the delivery of affordable housing. One of the major factors really is the cost of land and the type of construction you have to do to be able to deliver at scale in Tysons. And you mentioned a number of the resources that we use. We're very lucky that our Board of Supervisors has been so supportive of providing local dollars, which are really sort of that very flexible last mile that we're able to take and bring to the table to make these projects happen. We also, as a housing authority, the Fairfax County Redevelopment and Housing Authority, is one of the original 39 HUD moving to work housing authorities. And just that is a very special designation that we have that gives us a lot of flexibility in using our federal housing resources as well. So in addition to all of the dollars that we're bringing to the table, federal, local, et cetera, we're also bringing to the table 100 federal project-based vouchers for the True Ground project, which allows us to serve people who are earning very, very low incomes and give them access to all the opportunity that is available in Tysons. I'll just also say, again, I mean, housing is really a team sport. And for a local housing agency, one of the most important things that we try to bring to the table is that sense of that entrepreneurial spirit that allows us, that's unique in the public sector, but allows us to march in lockstep with our partners like Carmen, like Jason, and of course, like Senthil and the team at the Amazon Housing Equity Fund. And I'd be remiss if I did not mention that Fairfax County was also really lucky and very blessed to have an outstanding team of housing professionals who are able to bring decades of experience to be able to deliver housing like this and to be able to work with our partners in Tysons. You're on mute, Katie.
Thank you. See, it takes a village, right, Jason? So the aforementioned community center matters as a financing tool, right? It also matters, of course, for the residents and for the broader Tysons community. We're really excited as folks who think about placemaking in Tysons for that. So as promised, Tom, kick us off. Tell us a little bit about how that came together and maybe about how some of the different agencies and your colleagues in the county will be involved in thinking about its future.
Sure. The community center was born of an understanding that Tysons, as a rapidly evolving new urban community, needed a variety of resources to, in order to be able to serve the community that we were going to have there. And early on, I asked my colleagues at Fairfax County's Department of Neighborhood and Community Services, you're on the hook to have a community center delivered in Tysons. What would you think about partnering with us on this project? And they embraced the challenge and embraced the opportunity. The county's Economic Development Authority used their bonding authority to be able to provide financing for the community center component of it, of the project. And it will be a 30,000 square foot Fairfax County's community center that serves not only the residents of the 516 units that will be delivered as part of the development, but the entire Tysons community.
We are very much looking forward to it. Sendal, I think as everyone has touched on, certainly Amazon's involvement in these projects has been essential in bringing them to bear and making them happen. And so would love to hear a little bit of the how you all work, maybe a little more about kind of how you identify projects. What does your approach look like? Why you chose specifically these two projects to invest in them? And then I'd love to hear you talk a little bit about why is it important to Amazon as a major employer and corporate presence in the DMV and Northern Virginia to be investing in the creation of housing? I'll put it a little more pointedly, why not just make philanthropic grants to social services agencies? Why housing?
Which one would you like me to take first?
Whichever inspires you. Maybe if
Okay.
you want to talk while we're kind of talking about how these
Sure.
projects came to be, maybe we'll begin at the beginning, but then zoom out for us.
Okay. So as I mentioned earlier, like these projects were practically no-brainers in terms of like the desire to support. And obviously you had to get to a point of like where the numbers make sense. But in terms of the level of impact that they were going to have, it was very clear. So like Amazon generally has, the Housing Equity Fund generally has an application portal that opens periodically, and developers or owners can bring projects that they want for consideration, either new construction or preservation, because preservation is also a big tool that Amazon has used in the region. They've done some very large preservation projects in Arlington County and like in the district, and so it's really important to help plug the hole in the sink in terms of like losing affordability while you're actually building as new affordable units as well. So I think from our perspective, typically deals are funded through subordinate debt. I mean, without getting too technical, Amazon is lending capital at a very, very low, well below market interest rate, which then helps unlock additional affordability. And we're also doing it at considerably longer terms than typical construction or permanent financing, which allows that over time to create additional cash flow, which then is able to then be reduced to get either deeper affordability or longer terms. And part of what we were also focused on was that long-term affordability. Typical public financing whenever there's in a deal for affordable might be 15 years, 30 years, 40 years usually is typically the longest. We also wanted to help catalyze ensuring that there was long-term affordability in these high opportunity areas. So almost, I'd say 95, maybe it's closer to 99% now of the deals that we've funded also come along with a 99-year covenant, which ensures that there's affordability for that entire term. And that's a long time. For all intents and purposes, that's perpetuity. I mean, this is like, the lifetime of these properties. But what that really translates to is ensuring that there will be affordability in these communities that are rapidly growing, much like Tysons, over the long haul. So that's again another big push. And then pulling out a bit, in terms, Amazon, whenever especially when it moved into HQ2 or increased its presence in like Nashville, for example, like it's important, like when it comes into a community, to feel like it's part of the community. And the decision to create the fund didn't just come out overnight. It really was a lot of conversation with local leaders across multiple jurisdictions to try and understand what the priorities were. And like I mentioned, I gave Tom credit before, is like the key is having vocal leaders. And Katie, I know you were in Arlington before, and we had you were vocal there as well. So I mean, it was really helpful to understand what the local priorities were, and then for Amazon to come up with what I think is a unique solution to address what we clearly heard was one of the highest priorities, which is the need for affordable housing. So Amazon, when most people think of Amazon, obviously is like the e-commerce piece and whatnot, but Amazon, what comes to mind is speed and scale. It tends to do things at a large scale, and it tends to do things quickly. And so there was that same approach was taken when I'm considering on about how we could attack this issue. And that's what helped create the unique structure of the Housing Equity Fund. There were options where Amazon could have just directly contributed into a various public entities or various funds, and just basically just write a check and then be done with it. But Amazon really took a deep dive, which is again a very Amazonian thing to do. What are the challenges facing affordable housing finance, and what would help unlock a greater amount of speed and like a longer term. So it was really about understanding what the issues that both the public sector and the private sector were facing. And we have a product that is by no means proprietary. It's something that I actually think public sector or a combination, maybe or something on the federal level, like the GSEs of like Fannie and Freddie could take on this. I think what we've done is create something that's unique that helps unlock value for communities then to create what's important to them, which is ensuring a diverse community that's open for all. So
That's fantastic. Thank you so much. I'm going to pose one more question to all of our panelists, and I'll just note that our lines are open. We do have a Q&A box for those who have been listening along. We'd love to hear from you, what questions you have for this panel, this amazing panel about how housing gets developed in Tysons, how we can welcome more of it. And as well, if you have questions, as Drew and Kevin mentioned, about the market performance in Tysons, things you saw in the first third of our presentation, we can also let our esteemed panel take a breath, grab a sip of water, and make Drew and Kevin answer your questions as well. So please do submit those. Our team will be monitoring that Q&A, and we're happy to take those in. But as we wrap up kind of the formal part of the panel, a question for everyone here. We're really celebrating these projects as successes now. They are underway. We can't wait to welcome in new neighbors. But I think as is clear very much from your comments, the financing of these, making them happen is incredibly difficult. So what do you think the top 1 or 2 actions are from the private sector, the public sector, or other collaborators that would make it easier to build the next 1,000 affordable homes in Tysons? And I'll open the floor.
The simple answer, I think, is obviously the additional sources of funds. And if Sentha wants to go on a roadshow and pitch all the other corporations on their same model, I think it would be a great start. I think the other side of that, as long as we're filling a gap, which we're always going to be in Tysons, I mean, like Tom mentioned earlier, it's expensive. Land's expensive. It's expensive to build here. There's always going to be a hole with the products we have now. And there's always going to be a need for something creative and interesting, like the Housing Equity Fund. I mean, and then the flip side to that is the sources are what they are. You're always going to need something. But I think the other way to shrink the gap is from the cost side. I think we're kind of getting to this point where it's some of it's just the market. You can't do a whole lot about what happens with the price of land. The market's going to drive that. What's the construction cost? Typically, the market's going to drive that. I think we are kind of getting into this realm that you compare a lot of the requirements of affordable housing to even market rate housing. I mean, it's typically more expensive now to build an affordable unit just with all the requirements that kind of come along with it. The actual construction cost, but then all of the fun soft costs that we all love, and we'll get into all of them, but it's just expensive and it's complicated to build. But then I think most importantly, and everyone kept mentioning this, it's rare to have if not unique, to have sort of a housing. You have to have the partners, the public partners that are creative and entrepreneurial, as Tom mentioned. I mean, these things are not simple, and they do change. I said this in my first response. They change daily, and unfortunately, everyone just has to learn how to be kind of adaptive and pivot when they do happen.
And if I can jump in here, and I think everyone on the panel would probably agree. I mean, development's really about managing risk. So as much as parties can find ways to eliminate risk from the process. So on the public side, that might be, as Jason was mentioning, but like having expedited approvals, or especially if you're delivering affordable housing, because anything that added risk is added cost and added time. So I will say, in terms of like Jason's plea about additional capital, Amazon, while it did make its initial pledge of $2 billion, exceeded that $2 billion as of summer of last year. And our CEO actually announced an additional 1.4 billion, towards the fund in the same community. So like, I'm still investing in the area. So if you have additional projects in Tysons, adjacent to transit or nearby great amenities, please do reach out. I'm not hard to find. But beyond that, part of what I've been doing is, I wouldn't say it's a full roadshow, but we do want to talk about the product that has worked. And we've shared that information with, as I mentioned, the GSEs. I've met with Fannie and Freddie, the head of FHFA. We are talking to folks to show that it can work. And I think the tide is starting to turn. Again, housing finance is kind of like a super tanker, so it's not going to turn quickly. But I do think there are opportunities, and I think it's conversations like these and advocates like the ones that are actually on this call that to actually talk about like here's what works, here are the challenges, and then being able to talk about how challenges can be overcome. And but as Carmen was saying earlier, you just have to keep forging ahead, because it's not going to come without obstacles.
Yeah, and I would add, and I completely agree with everything Senthil and Jason said. A lot of it is going to come to political will as well, right? You need elected leaders who are going to support the zoning. In addition, I know you obviously have the Senthil and the Amazons of this world, but locality, gap money, housing type supports and services that make all of this work as well as critical. And, I remember you, Katie, fighting for Amazon to pick Virginia to be the home for HQ2 and putting housing on the table. You have the Jeff McKays who feel as passionately at Fairfax around, housing is a centerpiece to Fairfax. We need to make sure that it continues to stay on everyone's radar. And for members of the community that don't see the value in it, we need to talk to members of that community. And when the community center opens, bring them into that community, because I've seen that happen, and you all have on the screen as well. These are incredible assets to a community when we bring something like this online. And, I'm excited to see that transformation happen in Tysons. And, that is and then long term, then we can solve and get to the big numbers, but we won't do it without kind of increasing the number of people that care about this issue.
Katie, I would just build on that by saying that Amazon has created a model that can be replicated, and where else but in Fairfax County and in Tysons do we have a unique opportunity and ability to replicate that model? And I would say just as an example of the importance of the private funding that Amazon and Senthil brought to the table. Without it, we would have only been able to finance about half of those 1,000 units. And so that alone made the difference between Amazon's presence and their financing and their commitment to this issue. Literally made the difference between 500 units and 1,000 units. So, their contribution cannot be understated. And Senthil said there's no magic to it necessarily. It's a matter of commitment. And I think there's a real opportunity for our private sector, our employers, to help work on this.
Excellent. Thank you all so much. I think those are some really powerful calls to action. We are running a little short on time, but we have one thoughtful question that I think maybe could tee up an area to direct people for future engagement, which was actually one for the county, about kind of recognizing the success of these standalone affordable housing projects. How does that fit into policy conversations about including or requiring numbers of affordable projects in market rate, or affordable units in market rate projects relative to kind of offsite contributions? I wonder, Tom, if you might just sort of speak to how folks can follow policy conversations that might be happening about the ongoing discussion of the context about how the county thinks about the development of the provision of affordable housing broadly. Where can they learn more and follow along and weigh in on those discussions?
Sure, absolutely. I'm really proud of the fact that Fairfax County is especially transparent and inclusive about how it makes policy decisions relative to housing. We have an affordable housing advisory council that meets quarterly, that is, sort of a laboratory for policy development and, understanding, kind of the latest developments of what's going on in Fairfax County. Our board's housing committee meets also roughly quarterly. Those meetings are televised. But for deeper dives and for looking at data, the Housing Authority's website, fcrha.org, is sort of kind of the central news source for what's happening in housing on sort of a daily basis. And we are also preparing to debut our new housing dashboard, which tells you, how many committed affordable housing units do we have in the county? Where are they? What incomes do they serve? How many market affordable units do we have? To really to give, everyone, regardless of their level of expertise, a baseline understanding of what it is that we have. So we have, kind of a whole waterfront of opportunities to participate. And then, of course, there's always also the Housing Authority meetings themselves as well. So.
And we'll be a partner in pushing out some of those policy conversations as well. So thank you all. Again, thank you so much to our panelists for this really meaningful conversation. And even more importantly, thank you for the projects that you are building and financing to create more homes for a more diverse and inclusive Tysons. As we close out today's session on affordable housing supply, I just want to whet the appetite of everyone who is wrapping up with us today for some more forthcoming research from Tysons Community Alliance on housing demand. To help our community better understand the implications of national geographic trends and major population shifts, things we know are happening across the country, moves from north to south and rural to major metropolitan areas. To understand all of those shifts on Tysons, TCA is right now collaborating with our partners, Tysons' own Freddie Mac, as well as with John Stover and Associates, to anticipate future housing demands as part of a housing demand study. This builds on recommendations that came out of the Connecting Tysons Collective Strategic Plan, and our research partnership will analyze national and regional trends and how residential development in Tysons can adapt to meet the opportunities they present. That housing demand study will be released later this year. In the meantime, we hope that you will spend some time today with today's brand new quarterly market report. The link is here. We will also be sharing a link with you in follow-up. We're so glad to be able to share this data with you. We would love to hear from you about how you're using it and what other information can help you as you engage in telling Tyson's story and serving as our partners. Thank you once more to our panelists, as well as to my colleagues here at the TCA for today's insightful conversation. And we look forward to seeing you all out in the Tysons community soon. Thanks again.